All right, guys, I am Katie Biggs, and I'm the Marketing and Resource Development Manager here at NeighborWorks Montana. And today we are excited to bring you some new changes to our loan products. A long time coming to try and help you better meet your clients' needs in this ever-changing market. Just a couple quick housekeeping items. This is being recorded. It will live on our website, and we will email it out in our lender e-newsletter that you should all receive. If you do not, please let me know that in the chat. Kaya Peterson, our executive director, will be rolling through all these changes for you today, and excited to bring them to you. If you have any questions, we will be monitoring the chat. Please feel free to put your questions there, and we will get those answered at the end of the time. Feel free to mute and turn your videos off so that we can have better bandwidth. You can see the presentation and see Kaya. You're also more than welcome to stay on video if you want, but sometimes that helps with just connection issues. Like I said today, Kaya Peterson, our executive director, will be going through these changes with you, and we want to turn the floor over to you today, Kaya.
Great, thanks, Katie. Good morning, everyone. Wonderful to see so many of you joining today. We know that access to homeownership is just an increasing challenge in so many places across the state, and we want to, like Katie said, share with you some of the things that we're doing.
I'm in.
And some of the opportunities.
I'm in too.
Hold on a sec, I'm going to let folks. Some of the opportunities we have to try to serve some more folks and work with you all. So I'm going to share my screen and show you what we have going on. If I can advance, yes, I can. Okay. So for those of you who are maybe new to working with NeighborWorks Montana and aren't as familiar with us, we do want to just make sure everyone has a general understanding of who we are and what we do. So this is our mission statement. We work statewide with you and with others to strengthen our communities by providing education and financing that gives every Montanan the opportunity to live in a safe and stable home where they can thrive. Let's see. Here we go. Okay. NeighborWorks Montana has been around since 1998. So we celebrated our 20th anniversary just a couple of years ago. Many of you are familiar with our housing counseling and education work and our home ownership lending, but we also do real estate development lending. So working with housing developers on affordable housing options to preserve and develop new homes. And then we also do a lot of work with resident-owned communities. These are folks living in manufactured home parks, trailer parks, who we support to form cooperatives and buy their land. So 14 of those across the state, and a great way to preserve housing and advance homeownership. We have a team of 17 folks statewide with staff in Great Falls, Missoula, Helena, Kalispell, and Billings. So we really work to try to support home ownership and home buying with a few key tenets. As many of you know, we always pair our lending with education and counseling. We know how important it is for home buyers to have good information and have that information early so they can make the best decisions for themselves. We see you all as partners in that. We know you all do a lot of work to educate your borrowers and your buyers on their options, and we're one of those avenues for education as well. We pair that education and counseling with affordable financing. So our role is to provide that down payment assistance, working with you all as first mortgage lenders. Between those two things, we can help increase our buyers and our clients' purchasing power. If they can reduce their overall debt, if they can improve their credit, if they can increase their savings, and if they can have more affordable financing, that gives them more choice in the market. And that we think that's particularly important in the current market where housing prices continue to escalate and where clients have fewer and fewer options. We want to make sure they have as many options as possible. And you'll see that if you pair your loans with NeighborWorks Montana loans, often that can increase the amount of the purchase price that a client can afford and give them just a few more options in the market. We're really trying to make sure that clients have sustainable home ownership, that they don't only get into a home, but they can sustain that home ownership long-term. So we've seen, and there's been studies done nationally, that the combination of education and counseling with affordable financing really does lead to lower rates of delinquency and default. And that is part of our goal and part of our impact. And again, we just really want to work with you and make sure that as many folks as can have the opportunity for homeownership in Montana. Housing counseling and education, we have 15 housing counseling and education partners across the state, and just really encourage clients to get into that home buyer education and counseling early in the home buying process. Again, we think this is more important than ever. We know a lot of folks are getting frustrated with the current market conditions, having a hard time getting into home ownership, and having that education and counseling can give them just a little bit more of a leg up. So get your folks to those counselors early and often. And you can find all of our partners on our website. We have a section of our website dedicated specifically to homeownership clients, and you can search by location, by service type, and find any of our partners statewide. So when you think about your clients and you think about who needs some support getting into home ownership, we want you to think about NeighborWorks Montana and give you just a few key things to keep in mind in terms of who we serve and who we're best positioned to serve. So all of our products are for folks who are going to be living in single family owner occupied residences. We do not have a restriction on first-time home buyers. I think we are often thought of as serving only first-time home buyers, but that is not the case. We're much more focused on serving folks at certain income limits. We do have some products that have limitations on first-time home buyers, but most do not. So keep that in mind. With our income limits, again, we often have a reputation of serving low and very low income people. That's absolutely a target and part of our core mission as a community development financial institution, but we serve folks with incomes up to 125% of the area median income. So when we think about who we're here to serve, it's really those lower income people, but also that core workforce housing. For many of you who worked with us on the LIFT program, the last couple of years, you saw that there was a set aside for some of those essential workers, teachers, firefighters, police officers, veterans and active military folks. Those are among many of that core workforce, and that those folks who may have a little bit higher income, but are really needing some support getting to homeownership. So think about folks up to that 125% area median income. Another kind of general guideline is our asset limits and contributions. So we are making some changes to our limits there, and you'll see that a little later in the presentation. We want folks to have some assets to work with if they have the means to do that. We don't want that to be the significant barrier. But we do want to make sure that our funds are going to the folks who really need these dollars. We have limited dollars available, and we want to make sure that they're really serving the folks who need it most. So we have liquid asset limits up to 10,000. That's after purchase, after funds have been invested into the project. Total assets up to 100,000. And we have borrower contributions as low as $1,000 plus fees. So again, we're really here to recognize that there are a lot of folks out there who could be successful homeowners, but they just have a hard time saving for that down payment because of all the demands on their income and because of the high cost of rentals. So think about those folks. They have a little bit of assets, but just not quite enough to build up that down payment. And then in terms of credit, we are not a credit-based lender. We want to be serving folks who have a future of being able to repay their loans and be successful, but we also recognize that credit isn't the end all be all in helping us understand who's going to be a successful homeowner and who's going to be able to pay back over time. So at our baseline, we look at credit scores of 640 or higher, but we do consider compensating factors. So again, when you see those borrowers come in the door, think about folks who have that 640 or higher, but also look at those folks whose score is a little lower, but who you think have some good potential to be strong borrowers long-term. So then when you look at our loan products, this also gives you just kind of a high-level snapshot of how our products are structured. So you can see there, the loan amount is as low as $2,500 and up to $65,000. Some of you have seen higher loan amounts on our 20 plus product, and that's still the case, but this just gives you a general range. Our rates are from 0% to 7.5. 7.5 is on the high end for that low mod product, and you'll see that a little bit later in the presentation as well. Our term is typically 30 years. We really want to be seeing people get into fixed rate 30-year loans and have that stability of knowing what their financing is going to be long term. Our loan to value won't exceed 105% combined. Our ratios are typically 32 front end and 42 back end. So those of you who've worked with us, you've seen us publishing a 41 back end in the past. 42 is something we're very comfortable with. I know many of you have asked us to review those ratios and consider higher ratios. We know that there are first mortgage products out there that go much higher than this, but we continue to really need to hold to those ratios and make sure that because we're layering in a second mortgage, we need to make sure that these borrowers have the ability to cover all their debt and cover what they have outstanding. So we do consider compensating factors. We want you to think of these published numbers as guidelines. Anytime you have a borrower in the door who you think, gosh, if they could just get a little bit of help, I know they could be successful. That's the borrower we want to hear from you on. And we want to work with you to figure out how to help that person be a successful homeowner. And then lastly, just again, all of our clients, anybody who's using a NeighborWorks loan does have to have higher education. All right, so into the nitty gritty. What are the changes we're making? I just want to note, we recognize that this is not a panacea. We know that the challenges out there in the market are really great, and we have some other avenues we're working on that we'll talk about later in the presentation. But our goal for this round of reassessment of our guidelines was to say, where can we push just a little bit further? Where do we know that if we push a little bit further, we may be able to serve some more people, and we know that those borrowers can still be successful within these guidelines. So in that interest, you can see here we have 3 core products. For those of you who aren't familiar with these, they're all on our website, and we will be publishing new program details that will go up on our website next week. So we have our statewide low mod and our 20 plus community second. Those are our 2 amortizing loan products. And then we have our state home deferred. That's the 0% deferred loan targeted at folks at 80% and below area median income. So those are the 3 core products. Across those, we are making some adjustments to the maximum loan amount. So on our low mod, we used to only go up to 10,000. We're going to go up to 20,000 on that product now. And on the state home deferred, we used to have a maximum of 25,000 as a standard loan amount and up to 40,000 for folks who have a family member with a disability, who are buying a manufactured home or live in a high cost area. And we're bumping those up significantly. So on a state home, our standard is that we can go up to 50,000 for a borrower and up to 65,000 for folks who fit those special categories. Important to note on state home, this is the one product where we can only serve first-time home buyers, but we can also serve a family with a household with a family member with a disability, or a household where there's a single parent with dependent children. Those folks can also qualify even if they've been a homeowner previously. So just kind of think about our amortizing products as having a little higher income limits and not being targeted only at first-time home buyers, whereas that state home product is that lower income limit and targeted really primarily at first-time home buyers. We are adjusting our interest rates on the statewide low mod. I'll show you those on the next slide. And then we are bumping our fee up on that product just $50 to try to help cover our costs. But I think the real key takeaway here on this slide is recognizing with the price of housing increasing, recognizing that people need more down payment assistance, we are increasing those dollar amounts. So here are those rate changes on the low mod product. Standard rate is for any client, any lenders who are approved by Montana Board of Housing and are using our products. The loan pool rate is for those lending institutions that are invested in our loan fund. And I have that list of institutions on another slide here. So those loan pool lenders get a little bit lower rate for their clients. And you can see here that the pricing on these is really targeted based on income level. So just small changes here. We're really trying to make it a little bit simpler to communicate and a little bit clearer what the difference is between that loan pool and that standard rate. All right, so in terms of our eligibility and ratios, these are the changes that we're making at this point. On that 20 plus community second, we used to only go up to 120% AMI. We're bumping that up to 125. So for our amortizing products, any clients with household incomes up to 125% AMI can qualify. Again, those ratios, I already kind of spoke to this on another slide, but you can see here across the board, we're going to a 32-42. And there's a little nuance here on that state home deferred product. We have a minimum housing ratio on that product, again, to try to make sure that we're not over subsidizing the client and that we're taking full advantage of that first mortgage. So the housing minimum on those now is 28. And for any nuances on this, we just really encourage you to work with our lending team. We know that sometimes the devil is in the details, and sometimes you have a client where you're calculating something one way and maybe it's not the way we would look at it, but we have flexibility. We look at compensating factors and we want to be hearing from you on these clients. And then lastly, those asset limits. Again, I spoke to this in the previous slide, but you see there across the board, we're bumping those asset limits up to 10,000 in liquid assets and 100,000 in total household assets. All right, so here are those loan pool partners. These are the lending institutions who have access to that slightly lower rate on the low mod and who have access to that 20 plus loan product. So the 20 plus loan product is available only to lending institutions who are invested in our loan fund. If you are not one of these organizations and would like to consider investing in the NeighborWorks Montana Loan Fund and having access to that 20 plus loan product, we'd be very interested in talking with you, and I would be your point of contact on that. Okay, so as we look forward, like I said, we know that these changes are slight adjustments that we hope will make our products a little bit more accessible to a few more clients. Just to kind of think about where NeighborWorks Montana fits, remember, we are a community development financial institution, and our goal is really to try to meet those clients who are just outside of bankability. So we're not, our products are really targeted at this very kind of narrow band of folks who, but for a little bit of support, have the opportunity to access homeownership. A couple of areas that we are looking at actively right now are whether we could lend on 2-unit properties. So our guidelines right now say single family owner occupied only. But we recognize that with a lot of folks trying to purchase a home that may have a mother-in-law apartment or an accessory dwelling unit, looking at the changes in particularly some of our urban markets where there is a push towards more infill and needing more units and creating more opportunity for developing accessory dwelling units. We really want to make sure that our products are contributing to supporting that need and that trend. So we have already preliminarily brought this through our loan committee. There's a lot of support for it. We just wanted to make sure that if we develop this, it would pair with existing first mortgage products, and it looks like it will. So we expect to bring this to our loan committee for final approval next month, and we'll update that and get more information out to you all on that at that point. But our plan is basically to just say, we'll follow the first mortgage, we'll allow duplexes, mother-in-laws, and ADUs. They still have to be owner occupied. But we'd love to help folks get into those homes, both to have stable home ownership and also to have some income and asset building opportunities there. We tested this a little bit with the Lift product. We were able to do 1 to 4 unit dwellings with that product. And I think we had about 4 clients who did end up purchasing duplexes with that product. So great step forward, great thing to look at. And we hope to be able to roll that out next month. And then in terms of other active changes, those HUD purchase price limits. So on the state home product, a buyer is limited in the purchase price of the home that they can buy using that down payment assistance. And those purchase price limits are published on our website. We know that sometimes those price limits are not keeping up with what we're actually seeing on the ground in the market. So the way HUD calculates that is they take the median home price and they multiply it by 95%. So for example, in Missoula, when they just did their calculations, they came up with a purchase price limit of $304,000. Those of you working in that market, you know that the median home price is much higher than that. Maybe it's 350, maybe it's even higher at this point. So we've been working with some partners, including the state and Trust Montana, who's been a great leader, trying to figure out how to get some of their shared equity work out on the ground. And we're trying to get HUD to approve a purchase price limit up to 350 in Missoula. If that works, if that process works, we'll be looking at whether there are other markets that would benefit from being able to have a higher purchase price. We know that Big Sky has expressed interest and has been looking at that. And certainly there are some other markets in the state that could benefit from being able to not have purchase price as the limit for these clients. So again, that is not finalized yet, but I wanted to share with you, we recognize that it's a barrier for some folks. We recognize that the data sometimes lags what's actually happening on the ground, and we are trying to find some ways to improve that. In terms of other areas for expansion and exploration, so in addition to focusing on traditional home ownership, we also recognize that in the current market, we may need to find some other ways for folks to take a step into home ownership that don't look like what folks are used to thinking of. It may not be that single family home on a city lot or on a couple acres out in a rural area. Those properties are becoming really expensive and hard to support, particularly for the lower income buyers who we are here to serve. So there are a few areas where we have focused and are continuing to expand our focus. And those are really manufactured homes, community land trusts, and other types of shared equity home ownership, and Native American home ownership. And all three of those have been areas of focus for NeighborWorks Montana for over a decade, if not longer. And interestingly, those also line up very closely with the duty to serve and Fannie Mae and Freddie Mac and the areas of underserved communities and underserved housing types that they are focused on. So we're in good communication with Fannie and Freddie as they roll out their duty to serve guidelines and look at how they can expand liquidity and access to financing for these types of housing. Just a little bit more detail on this with manufactured homes. We see that there are, we know that there are some challenges with doing manufactured home lending on owned land. And that's something we're continuing to explore with our loan committee. The other area that we've been focusing on is chattel financing and trying to make sure that folks who live particularly in manufactured home parks and who don't own their land, that they have access to affordable financing. So if that's an area of interest to you, please reach out. We have a couple of credit unions who have developed some good chattel financing products. And then we've also been working with the state on being able to provide some down payment assistance to folks, again, paired with chattel financing, but recognizing that there really hasn't been down payment assistance for those borrowers in the past. They can't access our traditional down payment programs. And we want to be able to support them in buying those types of homes. In terms of community land trusts and housing cooperatives, there's growing capacity across the state and growing interest in community land trust homes. And there's some work happening on cooperatives as well. So NeighborWorks Montana, we primarily work with those partners on housing development and preservation. So we act as a lender to those nonprofits as they acquire land and acquire homes. But we're also looking at what other gaps there are in this area and how we can provide financing tools that help both those organizations acquire and preserve and create more of this type of housing, but then also what do those home buyers need in order to be successful. Native American homeownership, for those of you who work on reservation land and with trust land, but also for those of you working in urban markets and serving Native American borrowers. This has been a long time area of interest for us. And there's a great effort right now across the state to start building a Native American home ownership coalition. And it's being supported by Fannie Mae. And they're doing some survey work and some asset mapping work right now. So more to come on that, but that's a strong area of interest and continued commitment from us. And then again, we do a lot of homeownership lending, but we are also expanding our real estate development and acquisition lending and really looking at what is it going to take to be able to preserve existing affordable housing and also support building more housing as we look at the supply side of our current market needs. Historically, we've worked primarily with nonprofit affordable housing developers, but our products are available to for-profit developers as well. So for those of you who are working with folks who are developing housing, keep that in mind. We tend to serve a early money in role where we're helping to provide some of that early acquisition financing and pre-development funding that helps these kinds of projects get off the ground. So keep us in mind for that as well. And then lastly, in terms of product priorities, we've heard from many of you and we continue to hear about community needs, particularly related to home rehab. That's been a hard one for us to figure out how to address as a statewide organization and not having the bandwidth to be able to be on site and monitoring rehab projects and construction. But we have a few ideas and some models nationally we're looking at there. And then small dollar consumer lending. This is another area that many of our colleagues in other states have developed some really good models around. And as we look at the homeownership landscape, we know that it is going to take longer for some of these potential borrowers to meet their goal of long-term homeownership, and that there are other steps along the way that we need to be taking to help them be successful long-term. So we're really expanding our financial capabilities, counseling and coaching. And we know that in order to have successful education and counseling, we need to be pairing that with strong financial products. So revisiting matched savings and also looking at small dollar consumer loans that can help people build their credit. So again, these aren't immediate products we're ready to roll out, but we just wanted to give you a little bit of a sense of some of the things we're hearing and some of the areas we're exploring for long-term growth. I did want to spend just a moment to recognize the current environment and to recognize some of the different opportunities and supports that are out there with COVID stabilization and recovery. Over the last 2 years, our focus has had to really be redirected towards keeping people stable in their current housing situation while we work with them on a long-term homeownership or other housing plan. And part of what has allowed us to do that is some of the state funding. So we are currently a partner with the state, supporting them with applicants who are seeking emergency rental assistance. There is also funding for homeownership assistance. The state is currently developing those programs and products now. And if you have an interest or you see a particular community need around existing homeowners and what support they need to stay stably housed, there is an opportunity for public comment. You can go to the montana.gov website to look at that. What we expect is that there will be some support to help clients who are at risk of foreclosure, both in terms of dollars and in terms of education and counseling. So like I said, we're working on expanding our financial coaching capability. We expect we will also be expanding or trying to build back up some more capacity around foreclosure counseling in the coming months. We'll know more about that in August and be sure to communicate that with you all. But if you do see clients who are struggling or you see some needs coming down the road for helping folks who are at risk of foreclosure, it's really helpful for us to hear from you. Again, we know that the data lags what's happening on the ground, and you all are some of our best eyes and ears and early warning system so that we can build appropriate services and support those clients early. Okay, so that's what we're working on. Those are some of the changes. If you have a client who you think could benefit from our products, you can always contact our lending team if you have questions. I'm going to introduce them in just a moment. And then the other important thing is this reservation checklist. We want to be responsive and move clients through our process as quickly as we can. And the best way for us to do that is if we get all of the information from you as the first mortgage lender right out the gate. And that's what the reservation checklist is designed to help guide you through. So please refer to that checklist. We have made some updates, so we ask that you pull that reservation checklist directly from our website so you have the most up-to-date information and can see what we require and how to get rolling. Okay, here's our lending team, and I'm gonna jump off of my screen here in just a second to be able to introduce you to them directly. And just wanted to say thanks for attending today. Again, I'm Kaya Peterson. I'm the executive director. Always happy to hear from any of you if you have ideas or needs as we look at where we go from here. And there's my contact info. So I'm going to stop sharing and let's introduce our lending team, and then we can take questions. So Lori and Kay, if you're both on, if you can turn your videos on. And I don't know if Linda is on today. Lori, you want to introduce yourself? Say hi to everybody.
Hi, I'm Lori Yurko, loan specialist for NeighborWorks Montana. So yes, if you have any questions whatsoever, I think we'll take some questions at the end of this, maybe, Kaya?
Yep, that's right.
But anytime, just email me or give me a ring and we can answer, hopefully, your questions.
Thanks,
I'm
Lori.
excited that so many people are on today.
Yeah, it's great to see. All right, Kay, you want to introduce yourself?
Hi, I'm Kay Deline, and I am the loan processor. And like Lori said, if you have questions, comments, thoughts, give us a call, email us. If I don't know, I'll get you in touch with someone that does, or I'll track it down and then get back to you. So we're just here to help you guys, help our clients. So
Awesome, thanks, Kay. Those of you who've worked with us for a long time, you know Lori's been at this a long time and is incredibly knowledgeable. And Kay has been with us for a couple of years now and is increasingly going to be that first point of contact for many of you lenders. So if you have some just initial questions about a borrower or a loan, either one of these great staff folks can help you, but please do just reach out. All right, do we have any questions or comments?
I'm sorry, you know me. I always have to interject at the most inappropriate times. But I just want to say something because it gets a little bit confusing. So for those folks doing NeighborWorks Great Falls loans, we close loans in NeighborWorks Great Falls and we close loans in NeighborWorks Montana. So any of those loans we close in NeighborWorks Great Falls, so City of Great Falls loans and some Cascade County loans, they won't have these new changes yet. The changes that we discussed or that Kaya discussed in this webinar are for NeighborWorks Montana products only. So I just wanted to say that.
Thanks for clarifying that, Lori. Yeah, that's a really good point. So, we work statewide, but we also partner with other organizations that serve other targeted areas. So NeighborWorks Great Falls is a great example of that. And they do all the lending in Cascade County in the city. And then there are some other partners with the state home program. So although NeighborWorks Montana works statewide, we aren't able to serve every market with that 0% deferred product. There are some other organizations across the state that serve Billings and Bozeman and Missoula and Great Falls. So do keep in mind that they may have somewhat different guidelines that you'll need to follow for those clients.
And the only question we've really had, we're getting a couple questions now, but all of this information, again, like I said, will be distributed to you. If you've attended this webinar today, you'll also receive a mailing with the new loan product guidelines and some more information so you can have that in front of you. So all of it will be on and available for you to access, share with your colleagues, all of that. Quick question, what's your current underwriting turnaround time and other turnaround times with this current market?
Lori, do you want to take that one?
Sure. Well, we also have to follow all the TRID guidelines for disclosure, closing, all of that. So of course, that's our first turnaround limitation. But normally, if you're looking at an amortized program, either the low to moderate or 20 plus, we're probably looking at a 2-week turnaround time. When you get into the 0% deferred program, we're going to have a little bit longer processing time. We have other things and other organizations that we depend on for inspections and environmental reviews. And we're looking at probably 3 to 4 weeks turn time from point of application to close, probably 3 to 4 weeks on a 0% deferred.
Thanks, Lori.
Anyone else have any other questions? Feel free to throw them in the chat. We would be happy to answer them for you now.
Okay, it's me again. I just want to say that when you're going to add some subordinate financing to the deal, there will be a couple of more days added. So, just know that we really try our hardest to meet the closing dates that you all have in mind, but sometimes we might go a couple days longer or something, just because when you're adding some additional financing on there, it might just take a couple more days. So
Thanks, Lori. Yeah, good to, and again, that's another good reason to get that reservation checklist in early and start working with our lending team as soon as you know a borrower may need some of our financing. And I know on that reservation checklist, Lori, that we do ask for an appraisal on that checklist, but I think we note that we can take that later. We want to get the other pieces in first, right?
Right. I think we need most of the items on that checklist, with the exception of the appraisal that can come later. The homebuyer ed cert can, come later. Of course, in a perfect world, we'd love them to take homebuyer ed before the deal even gets started, but we know sometimes that doesn't happen. So that homebuyer ed cert can come later also. But for the most part, we need everything else on that checklist up front.
And then another quick question, do we still have to do a paperwork submission with the checklist, or can we submit it all paperless?
We can do paperless. Ta-da! We have been for quite some time now. Most lenders are emailing their loan request packages to us via secure email. If you don't feel like you have a good secure email, you can forward to us on our share file. You would just need to let us know, and then we would set you all up on that. But yes, we love to get the paperless loan request packages now. And or you can always mail or overnight to us, but we're living in the current century now.
We're trying, and with everybody having been working from home, we've really made that transition, and want to make sure that continues. So great questions, Lacey. Thanks.
Oh, of course, I'm interjecting again. But when you forward those loan request packages to us, if you could remember to send them to myself, Lori, and Kay. So that way, if one of us is out, the other gets it and we get it going in a timely manner.
Great. And we'll make sure we make that clear on the reservation checklist as well. So we'll have it in writing.
Any other questions for anyone today? And as Kaya mentioned, Lori and Kay are available to answer kind of your nitty-gritty questions on a case-by-case basis. But yeah, we thank you guys for attending today.
Okay, wonderful. Thank you so much. Looking forward to hearing from you. Take care.
Bye, guys.